E-Invoicing. It's a brief it's a brief about e-invoicing, how it is coming and what we have to do. It is a fundamental shift from periodic lockback to the continuous transaction control. Earlier, we used to do post-dated, means the invoices are raised and then quarterly VAT returns are used to file. So FTA used to get the details of the invoices after 3 months. So it used to have delayed visibility, manual reconciliation, and post-transaction VAT reporting. Now, with e-invoicing, we'll be having continuous transaction control, real-time transaction oversight, automated validation at the point of the invoicing, and immediate FTA validation. Visibility. Whatever invoices we will be raising, it will be going to FTA at the same time. Then earlier we used to have PDF formats, JPG formats, and paper, and we used to deliver it via email or physical like that. Now, and it was legally valid at that time, but now with e-invoicing, it will not be legally valid. Now the format with e-invoicing is XML matching paper print AI schema. That is the format which FTA will validate only. Delivery will be through ASP only. We can't do any other way to deliver the invoice. Invoice has to go through ASP only to FTA, and it is mandatory for compliance, validation, and input VAT claims. If we are not putting e-invoicing, then we can't claim input VAT on the invoices.
How is it, sorry Nikita, how is it related, input VAT and this?
Once we will get invoices from our buyers through e-invoicing only. So whatever invoices are there in the FTA system, only that will go. We can claim input VAT on that. Otherwise, on all other invoices, we can't claim input VAT. Then right now it's in scope for standard B2B transaction. If it is a B2C transaction, right now they are not implementing e-invoicing on that, but in a later phase it will also come. So all those small invoices will also go through e-invoicing only. Then holding companies who are charging their subsidiaries for management fees or some investment commission or something, that also is under for e-invoicing. Then if there are some foreign entities, they are performing some taxable services in UAE, that also comes under e-invoicing. And import-export invoices also comes under e-invoicing.
Import-export is also e-invoicing? Entire?
Yes, e-invoicing, entire e-invoicing.
And out of scope is not e-invoicing?
Out of scope is means that also we have, means when invoice is issued from UAE company to any other company which we are importing or exporting, they have to put that e-invoicing only. It can't go the other way. Then only exempted areas right now are B2C transactions, sovereign government activities, international passenger transport, and zero-rated financial services. Now, there are some tax groups, VAT tax group, which are issuing invoices in between themselves. Suppose a company have 3-4 branches and they are doing intercompany transactions. So, for that, FTA has given an exemption period till 31st December 2028. After 31st December 2028, even under the VAT group also, all the companies has to issue e-invoice from one company to another company. Even if they are related and they are under the same tax group, they have to issue the tax invoice under e-invoicing. Then under e-invoicing, we have 5-corner model. First corner is supplier. Supplier will generate the trade invoice in their ERP. It can be Odoo, it can be Zoho, it can be any accounting software in which supplier will generate the e-invoicing. invoice. From supplier, it will go to ASP. ASP will validate that it is having all the mandatory fields. It has everything, whatever required as a print AI schema. And then if some error is there, ASP will send back the invoice asking to correct that. If the invoice is correct, validated by the ASP will send that invoice at the real time to the FTA. FTA will get the data. Then ASP on the buyer's information will take the data and will send it to buyer's ASP. It will not go to the buyer directly. It will go to buyer's ASP. Buyer's
Oh.
ASP again will send the data to FTA and then it will push the invoice to buyer's ERP. So we don't have to send manually any invoice. Supplier will raise the invoice and it will be automatically pushed to the buyer's ERP system. The operational necessity of ASP. ASP is required in all these things. ASP will first get the raw data, then convert it into the mandatory XML format, check it against print schema, and then allow it to move forward. Then the ASP will securely transmit all the information, all the invoices to FTA and to the buyer's ASP. And at the same time, it will report it to the ASP at the real time, putting all the input VAT eligibility, that is it eligible or not. Then we have data identifier mapping. There are two numbers. One is TRN number that we all know, VAT registration number, city registration number. That 15-digit number is a legal tax credential that is mandatory for VAT reporting, input VAT credential, legal tax identification within Print AI scheme. Then there will be a separate number which is TIN number, tax identification number. That tax identification number are the first 10 digit of TRN. This first 10 digit are extracted from TRN and it is the primary participant identifier on the network for your e-invoicing. This exclusively route your invoices from this supplier's ASP to the buyer's ASP and to FTA. So this TIN number is extremely important to mention on the invoices. Then ERP, in the ERP system, the tax invoice will use code 380 for tax invoices. The seller electronic identification number will be 0235. Against the first the 0235 number will come and then the tax identification number will come, 10-digit number. And if any invoice is issued in a foreign currency, then official exchange rate which is provided daily on UAE Central Bank should be mapped in your ERP system and it should directly fetch that system, and now it is compulsory in e-invoicing to show that currency rate, exchange rate. There are 51 mandatory fields in the invoices which is required in e-invoicing. One is general field details, which is 8 field, which include invoice date, currency, tax type, and all those information. Second is seller's detail, that are 11 fields, which will include 15-digit TRN, 10-digit PIN, legal registration type, and other informations regarding sellers. Then buyer details, this will be 10 fields. It will have buyer electronic address, TRN, TIN, then address and other details about the buyer. Then document totals will come. It will have net amount, expected payment, means, tax amount and all those. Then tax breakdown, 4 fields are required. VAT rate, standard 0. It should be mentioned on the invoice itself. Then line item details, there are 12 fields. In this, unit of measurement, net price, exact category codes for every single line item is required. In my next education session on e-invoicing, I will be detailing these mandatory 51 fields. If we are generating any invoice for deemed supplies or for export. Then for buyer's identification number, because buyer is not registered with FTA, so he does not have the TIN number. So FTA has created dummy code. So we have to use that dummy code in our invoices for deemed supplies, and in free zone transactions we have to include the beneficiary details. And if it is a margin scheme and summaries, then it should particularly show VAT amount field as 0. There should be no VAT amount, and if an invoice has any negative totals or any negative amounts that are not allowed, if there are any negatives, some changes are there, we have to issue tax credit note. It is not possible to go back and change the invoices like we do right now, that in invoice is raised, after some time there is some dealing with buyer and seller, and then we change the invoices, we do the adjustment. Now if a invoice is gone, it is gone. If anything happened later, we have to create a tax credit note, tax debit note. Only that way we can go. Then revenue threshold for go live. First is large entities which are above 50 million. They have to apply for ASP by 31st July, and they have to go live by 1st January 2027. Then SMEs whose revenue are below 50 million, they have to apply for ASP and choose their ASP by 31st March, and then they have to go live by 1st July 2027. Then government entities will come. ASP deadline is same for government entities and SMEs, but government entities will go live by 1st October 2027. There is a voluntary adaptation from 1st July 2026 till January 2027. That is given a time period to check everything is correct or not. It is the window given to conduct integration testing. Like big clients have big invoices and their integration is also on a higher level. So they have to identify all the validation errors, fix 51 field data mapping and everything, so that they should not get any penalty once they are going mandatory go live phase. If there is a systematic non-compliance error, there is an administrative penalty of 5,000 per month for failing to establish or maintain the required ASP technical connection. Then there are compounding fines of AED 2,500 per instance of failing to issue a properly validated electronic tax invoice. Invoice issued outside the EIS are legally invalid. Buyers are strictly prohibited from claiming input VAT credit on these invalid documents, leading to rejected payments and destroyed supplier relationship. Then we have to retain the data, whatever is there, till 5 years. Standard period is that from the end of the relevant financial year, we have to put all the data in, means we have to retain every information for 5 years. And for real estate entities, this is 7 years. If some dispute execution or some FTA audit is going on, then after this 5 years, 4 years again, we have to keep the data. So total 9 years, we have to put the data. And for if there is any voluntary disclosure or anything, then this 5 year plus 1 year, we have to retain the data in our systems. For e-invoicing, first is conduct ERP gap analysis. First, we have to conduct ERP gap analysis, that our current system are having all these 51 mandatory print AI data fields or not. We have to put everything in there. We have to check that all the information.
How will we know, Nikita, all these details? How will we come to know?
This 51 mandatory fields I will detail in my next field, and whenever we are appointing any ASP, they will conduct this ERP gap analysis, and we can do for our clients also.
Okay.
ASP will do this gap analysis. They will train the IT persons how to do the integration. They will provide all the guidance, and then once the data is ready, then only it will go live. we have to clear the master data files, because right now suppliers, buyers, correct records are not there. Some where TIN number, TRN number is not there. Some address details are not there. So we have to put everything in our master data, and then we have to initiate ASP vendor selection and select from the 21 pre-approved FDA ASPs which are right now available.